Good morning, traders. It is Thursday, June 26th. A quick reminder, today at noon, we have our live mentoring session where we can go through all the charts together, ask all the questions you want, usually 1 to 2 hours, and we can cover most things in the markets. Now, overall, taking a look at what's going on in the markets this morning is just it's 8:44 in the morning, and we'll see how the market performs today. We're starting to see the market drop a little bit here in pre-market. It looks like some type of piece of news may have just hit. Let's just take a look at SPY. Looks like the futures market is the only thing moving on the SPY. Let's just take a look at QQQ. So something's up with the futures. Definitely seeing a little bit of a move here, but stocks are trading slightly positive. The interesting thing from yesterday was we saw the S&P 500 and the NASDAQ move higher. We saw a green bar yesterday, yet our panic selling indicator spiked over 3, closed at 4. And that's for a couple of reasons. The first reason is the big techs, the Magnificent Seven, were moving higher, dragging up the main kind of tech heavier indices like the NASDAQ and the S&P 500. And the Russell 2000, if we take a look at the Russell 2000 on the daily chart, it sold down about 1% yesterday. And we really saw a lot of money actually flowing out of the market yesterday, which is, this is what the market does, is very deceiving. The NASDAQ hit some new all-time highs, and it closed positive, making the average trader get really bullish and think things are strong. Yet there was panic selling, distribution selling yesterday. The Russell 2000 was down sharply. The majority of stocks were selling off with some big volume. We can see the same with the SPYD. Down big, down over 1% yesterday. So the big conservative dividend paying stocks got hit with high volume. If we look at equal weighted stocks, which moves out the large techs, the tech heavyweight, it was also negative. And of course, if we look at the main sectors that power kind of dividends and kind of the long-term investment strategy for dividend payers and buy and hold, utility stocks were down sharply yesterday. Energy stocks, which pay dividends, were down again yesterday. And of course, real estate REITs, where there's a good interest rate there or yield, big volume, big selling there. So that's one of the reasons why we're seeing dividend stocks hit so hard, is the dividend paying sectors. Three of them were all hit pretty hard yesterday, selling off and with some big volume. So definitely some interesting price action. The stock market, the NASDAQ, hits new all-time highs, gets the average trader really bullish, yet there's big institutionals dumping the majority of their shares, which is utilities, dividend-paying stocks, energy, real estate. So there's definitely this mix, this camouflage going in the markets. The markets make the average person feel bullish, yet underneath the hood, there's some big selling going on, and portfolios are getting lightened up, dumped into the hands of the average trader, trying to reduce their exposure. So today we're seeing stocks trade slightly higher. The dollar is down 0.25% this morning, pushing down. It was down sharper this morning, starting to have a little bit of a bounce again, still stuck in this downtrend. Gold and silver are up slightly. Gold's relatively flat. Has a little bit of a bear flag here, bearish pattern, stuck under the 5-day, stuck under the 20-day moving average. We'll likely see this continue to struggle for a little bit. If we look at silver, up 1% this morning, silver is holding its value much more. It seems people have shifted from kind of slow-moving gold to wanting to get into silver and miners, and they have been taking the majority of the market conditions, or majority of the gains kind of recently, holding up and moving there. If we take a look over at crude, it's up 0.5% this morning. Very volatile. It is under all the key moving averages now, and has this what could be a tight little bear flag. The short-term momentum has gone orange, so typically we go green, orange, red, meaning lower pricing. So definitely huge volume here on crude oil, news driven, obviously, war news, all of that stuff creating the big pop, and then it's fizzled out. And now we'll see what happens. Obviously, if more things happen overseas, oil could pop right back up again. But if not, I think we'll see this fizzle down and unwind to the downside.